Hello traders, Gary Wagner here. About 20 minutes to noon here in Honolulu, 20 minutes to 6 in New York. It is Friday, the 4th day of April 2012, and this is the daily report for gold and silver, our weekend review. We do have the precious metals markets higher, with gold closing up $6.30 on the day, up 0.39%. 1626.80 low, 1646.50 high, close 1643.10. That is the cash market according to Kitco. As you notice, I am putting up the net change. You can see it was much higher, but we had a strong dollar today, and that dollar, of course, influenced the price of the precious metals that are paired with the dollar. Silver up 27 cents, 30, 34, 30, 44 bid-ask spread, 29.74 low, and 30.54 high. This week, to say that gold bulls were at the edge of their chair, clinging on by the slightest of margins, would be an understatement. We're looking at June gold. This, of course, is a daily chart. We did have the market substantially lower yesterday, down about $17, I believe. And as you can see from our Heikin Ashi daily chart, this lower support band, although the market absolutely did breach into it, if you take a look at some of these lows here, the market closed at the support level that to me has remained absolutely critical. Now, as you can see, I have removed the study, so we have a straight candlestick chart now, and you can really see a little bit better how we did see these lows right in here go into and below that support line, but you can see clearly that we closed above it on a daily chart. Of course, today we did have the release of the U.S. jobs report, non-payroll jobs, and that came in lower than originally expected in terms of jobs gained. That put significant pressure on the stock market, down in triple digits, and only a modest gain in our markets here in gold. Traders, I've gone ahead and converted this chart into a 440 minute, so it's now a intraday chart, so it can reveal a little bit more data. And you can see from the trading activity after the jobs report the kind of strength that the market had in terms of rebounding and moving back up off of the line to close. We are looking at a weekly candlestick chart. This is of June gold. And what is significant to me about this chart is the following. We created one long Fibonacci retracement sequence, which begins from the beginning of the rally in 2008, very, very long term, all the way up to the top. When we do that and plot our 23% retracement level, you can see that although on a weekly basis throughout this month it has teetered below that point right in here, it has closed above it. Although slightly, it still has closed above it, as well as closing above this extremely long-term trend line. Now, when we take a look at this trend line itself, again, this is a June gold contract. We're fixing our lows here and here. We get another match here. And as you can see, it does touch the area, but was able to maintain above this critical point. To me, that's very significant, because for us to continue to work under the assumption that we are currently in a corrective triangle wave, meaning this type of correction here will typically have 5 legs. The legs will begin, your count will begin up here. This is your typical ABC, but this, of course, would now be wave 1. This is wave 2. This is wave 3. And we're trying to determine where wave 4 will be. We'll get 1/5 wave according to Elliott wave theory, and then a thrust at the apex that will break through that point. Now, that to me is an exciting possibility. However, traders, if we get a hard break to the downside, or below this critical area here, all bets are off, so to speak. This long-term trend line, as I said, it's begun back in 2008. And you can see that although we've had extreme volatility in the market, we saw it run from 1920 all the way down to about, 1520. We saw a huge $400 move in the market. In terms of stepping back and looking at the big picture is this dynamic uptrend that we've had since 2008, and that, in fact, is still intact. And that, for gold bulls, is a great signal. And traders, lastly, let's take a look at silver. I have not been as bullish on silver as I have been on gold of recent, and I believe that silver's been under a lot more significant pressure. Daily chart, we are looking at July silver, and of significance to me is the fact that we have had this steady slope and downtrend. More importantly, when we hit the 61% retracement, we kind of traded right through that area. Now, of course, daily chart, Heikin Ashi format. And of course, the Heikin Ashi format fixes the open as the midpoint of the prior day. When we remove this as a study, we're going to get a clearer picture of what we saw towards the end of the week. And this, of course, is on a daily chart in regular candlestick format. And the pattern that we are getting right now is simply called a piercing line. It is a 2-day pattern. To actually take that call, we would want to get confirmation, which would be the following trading day, higher high, higher low, green candle. That would be significant in that would be indicating on a short-term basis the potential for a pivot reversal to the upside. And if we see gold move up off of these lows, we should in fact see silver following in tandem. We'll have to see. There's been a divergence between the way silver and gold have reacted. This has been Gary Wagner, wishing you as always good trading. We'll talk to you next week for another daily update and review. Bye-bye.